computer. So good morning, good afternoon, everybody, depending on where you are. My name is Jim McDonald with Torrey Hills Capital. Pleased to be hosting today's call featuring AbraSilver Resource, an advanced stage exploration company focused on rapidly advancing its 100% owned Diablillos silver gold project in the mining-friendly Salta province of Argentina. In December of 2024, the company announced results from an updated preliminary feasibility study, which using 2550 silver and 2050 gold generated an after-tax NPV of 747 million and an after-tax IRR of 28%. Many of those numbers will be discussed further in today's presentation, given the movement in both silver and gold. So those numbers are probably significantly outdated in just less than a year ago. The company does trade in the US on the OTCQX under the ticker symbol ABBRF, also up in Canada on the Toronto Stock Exchange under the ticker symbol ABRA. And joining me today from the company, I have John Miniotis, the company's president and CEO. Before I turn the call over to John, just want to go through logistics fairly quickly. Nothing new here for people who have been on calls with me in the past, but just a reminder that our webinars are intended to replicate our in-person meetings, which we like and encourage to be as interactive as possible. With that in mind, if you have questions along the way, please feel free to ask them. The best way to do so is use the navigation pane, click on the Q&A button. One of us will see that, get those questions presented and answered for you. If for some reason we don't get to your questions fairly quickly, it's not that we don't see it or are ignoring it. It's simply that we know the answer to your question is going to be coming in the next 1, 2, or 3 slides, and we're going to let the normal course of the presentation answer those for us. Alternatively, if you want to speak with John at any point during the call today, we welcome and encourage that. The only way to do that is, again, use the navigation pane, click on the raise hand button. One of us will see that, unmute your microphone, and allow for direct conversation back and forth. For those that didn't see it, the company had an announcement on Monday of this past week about a significant financing that they completed. Details of which John will get into as we go forward here. But again, further strengthening the company, putting them in an even better position than they were a week ago, which was already in a position of strength. So without any further ado, let me turn things over to John and hear the AbraSilver story.
Excellent. Thanks very much, Jim. And thank you everyone for attending this call today. It's really a great pleasure to be walking you through our story here at this time. It's an extremely exciting time across the industry, and for us in particular, I would say. I mean, we really have a world-class primary silver project here that's rapidly advancing, and now we're in a very, very strong position to move this forward in a very, very aggressive timeline, which I'll walk you through here momentarily. As Jim mentioned, yeah, please feel free. Along the way, these are always, more interesting as people ask questions along the way. So feel free as we move through the presentation today. Please ask any questions you may have. Of course, there's going to be standard forward-looking statements made as part of today's presentation. So high level, AbraSilver, our key project is called Diablillos. This is a very large scale primary silver project here that's at an advanced stage. So last year we announced an updated pre-feasibility study. We're now rapidly working on a definitive feasibility study. And when you look at the size of the deposit here, it's grown tremendously over the last several years. And so we updated our resource estimate a few months ago. In July of this year, we announced yet another updated resource estimate. And so now we're sitting on about 200 million ounces of silver and 1.7 million ounces of gold. So if you do the math on a silver equivalent basis, that amounts to about 350 million ounces on a silver equivalent basis. Importantly, this is all close to surface, entirely in oxides, open pittable, very easy to mine, easy to process, standard processing technology here. And so this is a large scale, highly profitable development project here that's advancing rapidly towards a construction decision for next year. And again, we'll talk about that in a moment. Of course, on the economics side of things, we did announce our feasibility or pre-feasibility study back in December, so less than a year ago. And yeah, that showed very compelling economics, but that was done at almost literally half of the commodity prices that we have today. So our base case price scenario was just over $25 silver. Today, of course, silver hit over $50 and it's trading right around that $50 mark as we speak. So at $25 silver and at $2,050 an ounce gold. So again, gold today crossed over $4,000 an ounce. So essentially at half of the current commodity prices, this project has about a 750 million net present value, about a 30% after-tax IRR, 2-year payback period. And that's all because of the very low cash cost nature of this deposit. So even at $25 silver, very, very robust margins because our cash costs are coming in at under $13 an ounce. But when you run the sensitivity here, the torque is absolutely phenomenal. So at $50 silver, $4,000 gold, I have a slide coming up that shows you the impact on the economics. But yeah, I think the NPV is up more than 4x the base case scenario. So we're approaching $4 billion net present value. The IRR, instead of being after tax internal rate of return, instead of being 30%, is much closer to 70%. So yeah, we're approaching, phenomenal rates of return here, given just current gold and silver prices. And I'll show you, even though our share price has done well, I think we're now trading at a deeper discount today compared to spot prices than we were at the start of the year, despite all the progress we've made throughout the entire year. And so, yeah, from a valuation perspective, of course, we've had a nice run, as have most of the peers in our industry, but it's not reflecting anywhere near current spot prices. And so, yeah, I think lots and lots of upside ahead of us here, even if gold and silver stabilize. But obviously, if they continue to strengthen here, I think there's going to be a lot of catching up to do from our perspective, from a price to net asset value point of view. Now, this slide here, I'll have to update it very shortly. As Jim mentioned, on Monday, so a few days ago now, earlier this week, we did announce essentially a $50 million bought deal offering. That was very present to us, very attractive terms. And we're now in process of finalizing that. So we expect that to close in a couple weeks' time. That went very well for us. And so there was significant demand from institutional investors for our stock. And so even though we were fully funded to essentially complete the feasibility study, complete our drilling, and get to a construction decision stage, now with the extra funds, we're actually fully funded to start the early works construction. And so we'll talk about that in a moment too when we look at the schedule. But now for next year, we're fully funded even to commence construction and building this project forward. So very positive sign for us. When you look at the market capitalization here, just over $1 billion Canadian, you can see we have about 152 million shares outstanding. Now, post the financing, that'll be closer to about 160 million shares outstanding. So the dilution was actually less than 5% of our basic shares. So we issued just less than 5% of our total basic shares outstanding. But with that extra $50 million, you can start construction activities and advance this project by a whole extra year. So it was great to have that strong institutional demand for the stock. And I feel very confident that that stock was placed in long-term focused accounts. And so, yeah, I think we're very happy to have that announced and looking forward to closing that financing in a couple weeks' time. We look at our top shareholders. Central Puerto is the largest shareholder. They're the largest utility company in Argentina. They've been a very strategic shareholder of ours. Eric Sprott, of course, has been a very strategic shareholder of ours and continues to be, same with Kinross. So Kinross and Central Puerto both invested in us last year in 2024 for the first time. They participated in the prior private placement as well. And so, yeah, the shares right now are in very, very strong hands. And again, even after this financing, continue to have very, very strong long-term focused shareholders. When you look at the chart here, between the three top shareholders and ourselves, management and the board, we own about a quarter of the company. Again, we're all in this for the long run, looking to move this project forward here in a very timely fashion.
Hey, John, can I throw
Now,
a
yes,
question to you?
please. That's great.
So from Tom, one of the questions here is you mentioned starting early construction activities. Does that mean that you plan to take it through into production on your own?
Yeah, so we'll talk about that. So right now, I mean, the entire project will cost about $540 million US to build. This is a large scale project. Obviously, we don't have that fully financed at the moment, but we're going to have those discussions next year, looking at all our financing options. But yeah, assuming the terms are favorable there, which they seem to be in the current market here, absolutely. So we're looking to build out our technical team as well. It's actually a perfect segue into this slide here. So we just recently hired, or not hired, but on our board, Marie Inkster joined our board, and she's now chair of the company. So I worked with Marie over, a decade ago when I was at Lundin Mining. I was on the corporate development side. At that time, Marie Inkster was the CFO of the company. Very, very highly respected, highly regarded CFO. She won multiple awards, the Top Gun sort of surveys. She won them on multiple occasions as one of the, high impact sort of CFOs across the mining industry. She later became CEO of Lundin Mining. And under her helm, the company grew very successfully. And then she's since retired, of course. And then she was on the board of Vale, one of the largest base metal producers in the world, Brazilian company. And now she's on the board of Cameco as well, the largest publicly traded uranium company in the world. So to have Marie join our board obviously is a strong endorsement of the project. We have a very high quality project here. She has lots of experience on the project financing side, on the operation side of things. So we're working now very, very closely with Marie and the rest of our highly respected board as well to really evaluate those options. And on the management side of things as well, really looking to build out our technical team going forward. So about a year ago, we hired Jeremy Wayland, our Senior VP Projects and Development. He was, again, a Lundin Mining connection. So he was the Senior VP at Lundin Mining on the technical services side, and is now obviously leading the helm of our project and the feasibility study and ultimately the construction activity. So we're looking to build a team around Jeremy on the technical side. And absolutely, I think clearly the company is being very aggressive here. This is one of very few high quality primary silver projects out there globally. I think again, we have a tiger by the tail here, and in this market, you want to take this project into production as quickly as possible. So we're working to complete the feasibility study, get our permits in place. All of those will come together here over the next few months. And then having already the financing to start ordering long lead time items, et cetera, puts us in a very strong position. And absolutely, next year we'll be looking at project financing opportunities or partnership opportunities, of course. If somebody wants to come in and be a joint venture partner, or if there are other strategic discussions to be had, I think those will be evaluated next year for sure. Looking at where our project's located, we're in the province of Salta, consistently ranked as the most favorable mining destination, not only in Argentina, but in all of Latin America. So just recently, the Fraser Institute voted Salta as number one overall in terms of mining investment attractiveness across all of Latin America. And so I think the proof is in the pudding. I mean, surveys are one thing, but it's, to judge any destination, it's how many projects are actually being built. I mean, how many billions of dollars are actually being spent on the ground. That's what matters most. And you can see we're surrounded by a number of large-scale lithium projects. POSCO was recently built just less than 12 months ago. That was a multi-billion-dollar lithium project. Eramet, another very large-scale lithium project, recently built as well, now in operation. Fortuna Silver built Lindero. That's been operating very nicely for them. That was about 5 years ago. So that's an open pit gold heap leach operation. And now to the north, Rio Tinto is advancing their large lithium project as well. That's multiple billions of dollars. That's moving forward. And of course, we're right in the middle of things. So we're right in the middle of this lithium triangle here. We're right in the center of that with our Diablillos project. The infrastructure is excellent. So you drive to site. There's discussions now with Central Puerto, our largest shareholder, putting in a grid power line extension through this as well, because there's obviously a demand for power here from all these multiple operations. So the infrastructure is in place, very mining friendly jurisdictions. The locals are extremely supportive of mining and are honestly encouraging projects from moving forward as quickly as possible. And so we're really in the right place at the right time, being in Salta. This is essentially the Nevada, I call it, of Argentina. This is sort of, you know, operating number of large scale mining operations here all around us. And we're very, very confident now in saying Diablillos will be the next project to start construction here in the very near term. This is a photo, what it looks like at site. So just underneath this hill is the main deposit. We call that the Oculto deposit. So Diablillos is the name of the project overall, but we do essentially have two main deposits, two main open pits, and they're actually going to coalesce into one large pit. But Oculto deposit sits just underneath this hill here. You can see how the resource has grown year after year after year. Our exploration team has really done a phenomenal job growing the resource here. And we've done this on an extremely cost-efficient basis. And so when you look at the rate of return on our exploration dollars over the last 5 years, I'd say it's second to none across the industry as a whole. So our all-in discovery costs are about 11 cents an ounce. So that means for every 11 cents we spend on exploration, we find an ounce of silver in the ground. Obviously, an ounce of silver right now is worth $50 an ounce. So obviously a phenomenal rate of return there to be finding it for only 11 cents. And importantly, the pre-feasibility study, which is the last economic study that we've published, was based on the old resource, which was roughly 250 million ounces of silver equivalent. Since then, as I mentioned in July, we've grown the resource by almost another 100 million ounces of silver. Again, with silver being at $50 an ounce, obviously 100 million ounces of silver, makes a huge impact to the economics. And so the feasibility study that we're working on is going to be based on this, the current resource, but we're already growing that resource. So even by the time the feasibility study comes out, the resource is still going to be larger than what that study sort of was based on. And so we continue to expand this resource. Feel very confident in saying by this time next year, I mean, the goal is to get to well north of 400 million ounces on a silver equivalent basis. So you can obviously imagine with an updated resource, the silver resource is going to be well north of 200 million ounces, obviously, and we'll have likely about 2 million ounces or so of gold. And when you look at the trajectory of how we've grown the gold resource here over the last year, if we were able to replicate that, we'd have really a standout gold and silver project. I mean, most gold deposits, if they're 2 million ounces of oxides near surface, that's considered a very good size, gold deposit. And if you have 200 million ounces of silver on its own, that's obviously a very large scale silver project. But having both of those combined obviously takes this project to the next level.
Hey, John, if I can interrupt you with a question.
Please.
Do you expect annual production to increase in the new feasibility study?
Yes. Yeah, no, you're great segues here, Jim. We gotta we haven't practiced this at a time, but yeah, no, it's perfect. That's exactly this next slide. So this shows you the production, and this is of course was based on the pre-feasibility study. So when you can see our maximum production was in year two from this high grade silver zone is actually close to surface, and so those are mined in the early years. And this benchmarks the production in our pre-feasibility study and compares it against all the largest primary silver mines in the world. So currently, if we're in production as per our pre-feasibility study, in year two, we would be the second largest primary silver mine in the entire world, producing almost 18 million ounces of just silver, and then gold's on top of that. So this is not on a silver equivalent basis. This is just looking at silver. This would be the second largest in that maximum year two. And then on average, I think we'd be number six or so globally. So it shows you this is significant scale. But now with the updated resource, we've significantly grown this high grade Jack deposit. So this is so the black outline here was the pre-feasibility study resource. This white outline is now the new larger resource. And you can see the bulk of this difference is this high grade Jack deposit. And that's much higher grades of silver. And that's obviously very, very close to surface. So this will be mined in the early years. And so our preliminary estimates, obviously we don't have the feasibility study model ready at this stage, but based on our preliminary sort of model that we've been running, we're definitely expecting that in the initial years two, three, four, we could be producing north of 20 million ounces of silver comfortably. So well north of 20 million ounces of just silver in those early years, which would make this the largest primary silver mine in the entire world. And so again, most silver right now comes as byproduct credits. So about 70% of silver production actually comes as byproduct. So if you have a gold mine or a copper mine or a zinc mine, they're all producing sort of silver byproduct credits. But to have a large scale primary silver mine with gold as a byproduct, again, is very unique and obviously is very, very highly attractive under the current commodity price environment. So yeah, with the larger resource and given that it's much more silver rich, where we've grown the resource, we do expect a lot more silver production in the first half of the mine plan, I would say. And the
I
mineralization, as you get down deeper, does become more gold rich, especially at Oculto. So as you get deeper into the deposit here, it certainly does become at some stage become a primary gold deposit with silver byproduct credits. But in the first half, it's essentially a lot of silver with some gold.
Okay, no, and that makes sense. So my other question as a follow-up to that one then is if you are increasing annual production, I guess in the early years and maybe the average or life of mine average production increases, does the life of mine extend also, or does that stay
Yes.
the same?
Absolutely. It'll extend. So again, we had about 250 million ounces of resources, and now we're at 350 million ounces. So in the pre-feasibility study, we had a 14-year mine life. In our upcoming feasibility study, we're going to keep the same throughput. So we're not doing a plant expansion at this stage. And so the life of mine is going to be extended. It's going to get closer to 20 years, I would imagine. And so the reason for not, again, doing a expansion of the plant, I guess there are several reasons, but the primary one is that we've already applied for the permits. And so we're very far advanced in that permitting process. We applied last year for those permits, and we're in the very final stages. And so we expect to receive positive permits granted here very, very shortly, hopefully within the next month or so. And so we don't want to now have to adjust those permits. So we applied those permits based on the pre-feasibility study. And so, yeah, with those in place, and then obviously with the feasibility study in place, we'll be ready to start ordering again the long lead time items and start sort of early construction activities in early 2026.
Excellent. No, I thank you for that. I'll let you continue on. No further questions currently.
Great. And then, yeah, this kind of shows you again the resource I mentioned is essentially two large deposits, Oculto and Jack, and the two coalesce. There are a number of regional targets around that where further drilling is warranted. There's a Sombra target, and we feel Sombra could be almost a parallel zone here between a Jack and Oculto. You could have this other structure that goes north-south here, Sombra. We've drilled about a dozen or so holes last year into Sombra, got good, silver grades close to surface. And so later on this year, we'll be drilling the Sombra extension target. But really, where we've been focused this year is on this Oculto East. And the reason for that is that back in May of this year, we announced the best ever gold intercept in this project's history at this Oculto East target. So just on the eastern edge of the current pit, conceptual pit, we encountered 31 meters of 10 grams per ton of gold in oxides. And that same intercept also encountered 300 grams per ton of silver over 13 meters. So truly, truly phenomenal intercept. We've been following that up, and you can see all the drilling we've done here, sort of in green. You can see the areas. These are all holes that have been completed. The vast majority of these are at the lab as we speak. So we have about 10 or so holes at the lab now at Oculto East. And so as we get those results in, typically as we get maybe 3 or 4 drill holes, we put out a press release. So over the coming weeks ahead, we expect to receive these results, and we'll be issuing press releases and updates as we receive those results. So lots of catalysts here coming up. And the plan now, again, with the additional financing secured, will certainly, again, become a bit more aggressive and start drilling deeper down into. So we do believe there is a porphyry down deeper here. We've had some great copper intercepts. So in the appendix, I think I have a slide if I skip ahead here just for a sec. So you can sort of see here in green beneath Oculto, sort of these holes are numbered 1 through 5. And these are the grades sort of at in this table here. But you can see, for instance, one of these holes hit 30 meters of 3% copper with good silver. And then you got another intercept, 2.3% copper, 3 grams of gold, 300 grams of silver over 40 meters. So we've had some spectacular intercepts into the sulfides. Up until now, we haven't really tested those because we've been focused on the lowest hanging fruit, which is obviously the near surface oxide mineralization. But clearly now, as we're advancing the project to the next stage with the feasibility study and now getting the wheels into motion for eventual construction decision, we do need to understand what's sitting beneath this. And so I expect later on this year, we'll be drilling multiple deeper holes looking to extend sort of the copper gold mineralization down deeper into the sulfides.
And John,
So
just as a follow-up to that, right? I mean, you talked earlier sort of primary silver, but good gold, and not a whole lot about the copper side of things. But as you get into
yeah.
production, is copper something that will be able to be mined?
Down the road, yeah. So this is, again, this will be in sulfides. So this won't be able to be processed through the existing plant. And so that's why we have not focused on it at the moment. So the existing plant is going to have a straight agitated leaching plant and producing gold and silver doré bars. So with a agitated cyanide leach, you can recover the gold and silver with very good recoveries in the mid 80s for both those metals. For copper and for the gold that's locked in the sulfides, you will need sort of a flotation plant. So it'd be almost a separate processing plant. But certainly, once the oxides are mined, if you're sitting on a large sulfide deposit here, you would obviously put in the investment and sort of be able to recover those.
Okay, perfect. Thank you.
Yeah. So just going back, so yeah, on the exploration side, still lots and lots of upside. And we're also drilling sort of this other sort of, we have a large land package. It's over 80 square kilometers, about 4 kilometers to the northeast of the existing deposit. we have this area, again, some outcropping porphyry style mineralization. This is known as Cerro Viejo, Cerro Blanco targets. We're drilling those as well as we speak. So really, again, being a lot more aggressive now on the exploration side than we have been in years past. In years past, it's just been focused on stepping out Oculto and Jack and growing the resource. Obviously, that's paid off for us because we've had great success there. But now it's looking at these other regional targets as well that could provide a lot of upside potential. So as we're doing that, of course, the project's already large enough where we feel very, very confident that the feasibility study is going to be extremely robust. And so when you look at, again, the pre-fees based on very outdated commodity price assumptions, this study is less than 1 year old. And I think when we were putting together the study, maybe I think silver was around $28. And so we used 25.50 as sort of a base case commodity. And of course, at the start of this year, gold was just over $2,000, maybe 2,500 or so. And so these commodity prices weren't that out of date when we put out this study less than a year ago. But again, compared to, I mean, they're literally almost doubled now. And so, these figures, take them for what they're worth now, but obviously extremely outdated. But even with those extremely low commodity prices, this project still has positive economics, 750 million US net present value, 30% after tax rate of return, a very, very quick 2 year payback period. So I see this now as an extremely downside price scenario. So obviously, if gold and silver, take a 50% haircut from current levels, that shows you this project is still economic and will still advance to construction. And one of the main reasons for that as well is the positive changes that have been announced over the last year now in Argentina. So this is this new RIGI incentive regime, where this is under President Javier Milei. He passed this into law last year in July of last year. He passed that into law. And it's meant to encourage new large-scale investments from going ahead in Argentina in the very near term. And so if you have a project in any industry, including mining, where you're investing over $200 million into the country, you get a 30-year stability agreement. And that stability agreement grants you lower taxes. Your taxes are only 25% instead of the normal corporate tax rate of 35%. They're eliminating all export duties. Historically, these have been very, very high. 8% to export gold outside of the country, 4.5% for silver. But for projects going ahead under this RIGI regime, you're guaranteed zero export duties over a 30-year period. And most importantly, there's no more foreign exchange restrictions either. And so again, this has always been a major obstacle in Argentina. And so there's always been that, you export gold and silver abroad, you're being forced to repatriate your funds back into pesos. And then there's a whole bunch of mechanisms in place right now where you can, convert your pesos into dollars. But it's not the most efficient system in the world, that's for sure. For projects that go ahead under RIGI, you sell your gold and silver abroad, you can keep US dollars abroad. So you don't even have to repatriate funds into pesos. So you don't have to worry about the different FX rates and any currency restrictions. So it's a game changer for this project. And we are the only primary silver project that we're aware of that qualifies for RIGI. So RIGI, again, is a very near-term incentive that's in place. It's currently set to expire by July of 2026. And so to take advantage of this, you have to apply for RIGI. Obviously, you'll need your permits in place, etc. Because once you're approved, you have 2 years to spend $80 million. So they want projects actually moving ahead and being built. And now with the $50 million Canadian financing that's going to be closing here in a couple of weeks, again, we're fully prepared to start spending the funds here. And so, we're in an excellent situation now to take advantage of RIGI. We're applying for this certainly in Q4. So in a month or so, we expect to apply for RIGI. We expect to receive approval in Q1 of 2026. And then from the date of our approval, we'll have 2 years to spend $80 million. Sure there's any questions there, Jim?
Sorry, yeah, there is a question unrelated to Riggy, but from Michael, what has been your biggest disappointment so far, and how did you adjust?
Yeah.
I'm not sure you've had a
Yeah, I mean,
disappointment, to be honest.
so yeah, look, we've come a very, very long way. So I've been running the company for over 5 years ago now. So yeah, when I started back in December of 2019, a much, much different commodity price outlook. Argentina, again, was viewed as being uninvestable by many, many investors. So we had a hard time raising money initially out of the gate. And so I think that's really what helped us, though, be very prudent in managing the money, being as efficient as possible in terms of our exploration program. So yeah, in terms of disappointments, again, I think it's just been year after year. We've had great, great success. Obviously, the share price has done phenomenally well. We were just over a $10 million market cap when we started. We're $1 billion today. The project's grown threefold. So there haven't been many disappointments, but I think just having the hardships in the early days of not being able to raise much money, having to market all the time just to, raise a couple $1 million from investors, having people consistently, have negative comments on Argentina, has really made us extremely resilient. And so I think that's, even though it hasn't been a disappointment, it's just having those big hurdles to overcome in the early years. Made us extremely lean, of course, and extremely efficient on how we spend money. And I think that's been by far the greatest reason for the success we've had. And so just having tough times in the start makes you extremely resilient. And so, yeah, we haven't had any disappointment. Like the exploration's gone extremely well. All the economic studies have gone well. The permitting's going well. Everything has gone well for us. So knock on wood, we haven't had a major setback, but we certainly had challenging times. And it was just the overall market. Obviously, silver was like $18 an ounce when we started. Argentina, obviously before President Milei came in, was run by a socialist government for the last sort of 60, 70 years, I would say. And again, had a difficult reputation where you can get money in, but you can't get money out. That's now completely changed. And so we're in the right place at the right time. If you're ever going to build a mine in Argentina, it's right now. And it's under this new RIGI incentive regime. So yeah, I think we're extremely, extremely fortunate that things have generally worked out very, very well for us.
So, as a follow-up question to that, also from Michael, he wants to know, what did you see in Argentina when you started that others did not?
Yeah. No, I think it's again. So I came from Lundin Mining. So Lundin Mining was a background, and of course, I think the late Lucas Lundin. I mean, what he would see is go get the best asset that's available, regardless of jurisdiction, because jurisdictions change. And so back then, I mean, they were in the Congo, so Tenke Fungurume, one of the best copper deposits anywhere in the world. I mean, they acquired that for literally almost next to nothing. I think because yeah, the Congo was seen as completely uninvestable, and who's ever going to build a mine there? And it takes decades sometimes for things to change. And so obviously Argentina was nowhere comparable to the Congo. I mean, the Congo has a whole bunch of issues that Argentina unfortunately does not. But same thing when they're going into Ecuador, picking up Fruta del Norte. I think that was Lundin Gold picking that up and saying, look, if it's a quality asset, you want to be advancing those, and then at the right time, things generally have a way of coming together. So again, being in the middle of Salta, Argentina as a whole, I mean, there are certain provinces still to this day we would not invest in Argentina. And so very, very difficult in terms, it's just like the US. I mean, it's no different. In the US, there's certain states, it's going to be extremely, extremely challenging to get permits involved, to get communities on side. I mean, if it's anti-mining, that could take sometimes generations. So that's a really long term if you're trying to get jurisdictions like that to come around. But in Salta, when we looked at it, we knew there was all these lithium projects nearby. I mean, we saw Fortuna Silver building Lindero with no opposition. We knew Taka Taka, of course, First Quantum had acquired that project, was advancing it, and all the communities were on side. But it was just the federal government, I'd say, with the currency restrictions and all of that, that made I'd say Argentina less appealing. But yeah, now obviously with the change, I mean, we got extremely fortunate. We didn't imagine it would completely change the way it has. But we saw that, look, if you have a world-class project, even under the old regime, you could still advance that. And so it'd still be highly economic. And so, yeah, while most people were looking Mexico or another Peru and other countries across Latin America, we happened to come across this one in Argentina and saw this was a very high quality project being overlooked by many. And so, yeah, we picked it up, and thankfully, thankfully we did. It's obviously worked out very well today.
Excellent. No, great question. Question here also from Craig. With resources to be more assertive, are there any limits on equipment, crews, or other needed resources?
Yeah, so as we're looking to commence construction next year, again, thankfully, those large lithium projects around us, so POSCO, Eramet, those have now been built, and those were well over $1 billion each in terms of CapEx. And so those teams that built those mines are available. I mean, those are now in operation. And so thankfully, I think with lithium prices really having slowed down over the last 2 years, that's really helped out with the availability of labor and the availability of teams available. So those projects have been built. Now they're up and running. And I'd say, we can definitely benefit from the expertise there and having those teams that have built project literally 20 kilometers away from us, having them help us out on the construction side. And overall, look, Argentina is still not a beacon of sort of on the economic side. It's not a beacon of prosperity by any means. I mean, unemployment still extremely high throughout the country. Salta is a great place in Argentina to live, and so I think absolutely, if you can easily have people, local Argentinians from across Argentina. You give them good employment opportunities. They would gladly move to a place like Salta, which is a beautiful city. Then we're going to have a large camp at site, and so they would stay at the camp and then commute back and forth to the city of Salta primarily. So we don't see any huge issues. Again, this is not like a multi-billion dollar massive copper gold porphyry that we're building. It's a relatively small, it's a 9,000 ton per day open pit in oxides. CapEx is $500 million. So it's a good sized project, but it's not massive in terms of other potential open pits globally. So we're not going to see too much difficulty, I'd say, hiring for a project of this size.
Do you expect any significant, I'll say, increase in CapEx as you go to the feasibility study?
Yeah, for sure. There have been inflationary pressures globally, including Argentina. And so the good thing is, look, we just updated our pre-fees less than a year ago. So that was in December. So it's not like the pre-fees is 3 years old and CapEx is going to double or anything like that. But there has been inflationary pressure. So as we're repricing out sort of across the board, we've seen maybe CapEx and a lot of items maybe up sort of maybe 10%, let's say, to give sort of a general guidance on a lot of sort of larger equipment items, et cetera. So yeah, I'd say reasonably to expect some CapEx increases, but we are looking at ways of offsetting that. And so we're looking again to reduce CapEx here. There's three large initiatives. So we're looking now to connect to the national grid power line extension. That could, instead of building our own power plant, that could save us $60 million. We're looking to upsize the fleet and outsource the waste movement to contract miners. That would save us about $45 million of CapEx up front as well. And then over the life of mine, we're looking at redesigning sort of the waste rock and putting that up next to the tailings facility. And that could be a life of mine, sustaining CapEx savings of about $90 million or so. So there are these optimization opportunities that are hopefully going to largely offset any inflationary pressures we've seen.
Excellent. Nope, appreciate that. Hopefully, Craig, that answered your last question as well. If you have, for folks out there, if you have questions, again, use the Q&A button. We'll get those answered for you. But I'll let you continue on, John.
Great. Yeah, and this is the slide that's really, I think, most important right now. Puts things in perspective because again, as we've been marketing, people see the share price. We're up about 200% or so year to date. So obviously, we've had a very good move. most people just feel, look, we've probably missed the opportunity. The thing is, when you look at spot prices and you run the economics where we're trading today versus sort of what this project's worth on spot prices, we're at a lower discount. So we're trading cheaper today than we were even at the start of the year. So we just updated this. So if you look again at $50 silver, $4,000 gold, which is as of this morning, this project has a $4.1 billion net present value versus the base case that we announced in December of 1 billion. And so when you look at where we're trading, we're essentially trading our current price levels about $7 Canadian per share. So we're trading based on the pre-feasibility study figures, just over 1 times net asset value. So if you believe all the economics in the pre-feasibility study and you're still using $2,000 gold, $25 silver as your long-term price assumptions, then yeah, we're trading at full value. But if you even use consensus, which is extremely out of date, I mean, look at consensus less than $2,500 and under $30 silver, we're still trading at a reasonable discount to that. So based on consensus prices, here we'd have $10 would be the net present value on a per share basis, and we're trading at $7 roughly. So we're trading at 0.8 times NAV, which I think is a good valuation sort of discount for a project of our stage. But again, you're not at all reflecting the reality. So if you're looking at current market prices and you just assume flat gold and silver prices from this point forward, we should be trading closer to $27 per share. And so again, trading at a huge discount. And I think this is the case for many of our peers, probably across the board. The market, even the consensus price case is not up to speed here. I think gold and silver has really taken off over the last several months. And so if you update valuation, I think, the miners look extremely cheap. High quality development projects are trading at pennies on the dollar. And so, yeah, I think a lot of catching up to do as long as gold and silver prices are able to maintain anywhere close to current levels.
Well, and I add to that, all along the way, I feel like you've been doing things to improve the project, improve,
That's
decrease
right.
risk, et cetera, et cetera. So not only, you're cheaper today than last December on a price to NAV basis, but you're less risky and,
That's
you've
right.
accomplished a lot more. So,
Yeah,
even more
the
reason.
very important point. So this pre-feasibility study, again, this is based on our old historical, so 250 million ounces of silver. So that's based on this, and I'm just updating commodity price. So we're not even reflecting, we've already grown by 100 million ounces. Obviously, I can't reflect that in the sensitivity. And we're growing again. I mean, now again, we could be 400 million ounces plus sort of by this time next year. So adding almost 50% to the resource. And so, yeah, when you're doing these, high level sort of sensitivities here, you're not incorporating more resources. Even the resources that we had historically, those were calculated, the reserves, I think, were calculated at $20 silver and obviously under $2,000 gold. So even the same resources at current prices have grown significantly, and we've defined new areas. So yeah, none of that's reflected sort of. So if you look at spot price and current, I mean, economics, if we had an updated mine plan, again, I think we're trading, my guess would be a point 0.1 times NAV or something around there. So we're probably trading at 10 cents on the dollar compared to what this project's worth today without even giving any further upside in terms of future exploration, et cetera.
Yeah,
So
no,
great.
very exciting. I did see a hand go up and I did see the
All
hand
right.
go down fairly quickly. So, Chris, if you did have a question, maybe you're typing it in now, but feel free to raise your hand again and we'll come back to you. Oh, sorry, Chris has his hand up.
Great.
Maybe not. I don't see it anymore. So, if he comes back, John, we'll
Okay.
go to him. But
Yeah,
for
no
now, I'll
problem.
let you continue.
Great. And just a couple of slides here to wrap up pretty quickly here. So again, when you look at silver production out there globally, so there's some well-known producers. So I'd say some of the smaller sort of producers right now, silver producers. are producing about 10 million ounces or so of silver per year. The larger players are 30 million ounce plus, and all of these have multiple operations. Our one mine alone, Diablillos, here again, we expect this is going to go hopefully north of 20 million ounces with the new feasibility study. But with just one project, one mine, we'll be producing north of 20 million ounces of silver, especially in those early years, is certainly our expectation. And so really we're in the sweet spot. So we're going to have much higher production levels than many current producers. And we're going to be very, very significant compared to some of the larger producers out there. And especially when you look at cash costs. So this is how all the producers rank up in terms of all-in sustaining cash costs. Given the mineralization is very close to surface here, easy to mine, easy to process, very good recoveries. We would have the lowest cash costs out of the peer group. And so, yeah, once this mine's in operation, that's why we're moving forward very, very quickly here. Once it's in operation, I mean, we would see a significant re-rating upside compared to current valuation levels. Just final slide here, then I'll open it up for any final Q&A. But yeah, as we look forward over the next 12 months, even really now over the next 6 months, I would say, sort of really we're at a huge inflection point where, I mean, obviously we've been known as having great exploration results here for the past several years, but we're really becoming a developer in the very near future as we speak. And so again, when Marie Inkster is joining our board and obviously is going to be helpful when we're looking at project financing and ultimately operating, having that oversight now to our board when we've raised the money needed to start placing long lead time items, etc., kind of puts this, the wheels are already in motion here. But yeah, several catalysts coming up. So obviously lots of drill results, so that's going on in parallel. But to move the project forward, looking for the EIA permit approvals, as I mentioned, certainly before the end of this year, we expect that. We expect to apply for the RIGI, the incentive regime, before year end. We expect to get that approval in Q1. And at the same time, we'll announce completion of our feasibility study in late Q1, early Q2. So certainly in the first half of next year, we'll complete that study and announce that. And then really, we've already, again, with the financing we've secured, we can start placing long lead time items and making upgrades to the camp, etc. So start early construction activities. And we've given ourselves until about the end of Q3 next year to look at project financing options. So about $540 million US is the total capex here. So we'll look at, are we going to build this ourselves? Are we going to partner with somebody? Are we going to put a stream on this? All of those will be evaluated here in pretty short order. And by this time next year, I expect we're going to have that project financing in place and looking ready to start sort of shovel-ready project here with construction activities starting about 12 months from today. So very, very exciting time for our company. Again, with the right backdrop, with gold and silver prices doing what they're doing, and obviously Argentina significantly turning the corner and offering this new incentive regime to encourage projects like this one from being built. I think we're just extremely fortunate to be at the right place at the right time. We see lots of upside ahead, and we're just busy trying to surface value here every step along the way.
Excellent. For sure, at the right place at the right time. Here's kind of an unfair question to you, but do you have a preference on, I guess, looking, down the road a year from now on whether you were to bring in a partner or, do this on your own, do a stream, something like that?
Yeah. No, I'd say my preference is very, very much aligned with all our investors. I mean, I'm in this as a major investor myself. A massive portion of my net worth is tied to this company, of course. And so, yeah, the share price is going to dictate the way things go here. I think, obviously, if there's an offer we can't refuse, something at a massive premium, then of course, we're going to consider that very seriously. But at the same time, we know what we have here is extremely, extremely rare. There's a scarcity of silver out there, obviously, as you can see by the current silver price movement. There's a lack of high quality silver projects being built. And so all of the existing producers, are looking for growth opportunities, and there's not many to choose from. So yeah, I mean, we're happy to continue advancing this, building this out, and then having those discussions. And it's all a matter of price. And so we're in this again as shareholders. And so yeah, whatever makes most sense for our shareholders is what's going to benefit us most as well. So 100% alignment here as a major shareholder.
Excellent. Another question for you, and there are a couple questions in the queue. I'll get to those in a minute. But my question is, when you sort of think about a project like this, right? From the time that somebody drills a discovery hole, whether it's, here in the US or someplace else, can you just sort of give a quick overview on sort of what the time frame is to take that from, the discovery hole being identified to then potentially getting into production, and then sort of talk about that with, you're talking about a construction decision sort of a year from now, if you will. And then how long is the construction period, and when could somebody see, production actually begin?
Yeah. Yeah. So great question. We're really, again, when we say advanced exploration, yeah, it's taken a long time. I'll talk about the history shortly, but where we sit today, again, obviously with the feasibility study coming out here in the next 6 months, I would say. And then from having, once we have project financing, obviously we could start construction. It would be 2.5 years to build this project. So we would expect commercial production in 2029. And so again, all the wheels are already in motion to advance and achieve that timeline. So that's a very realistic timeline from where we sit today. But yeah, when you look back, I mean, really I mean, there has been, drilling activity here even back in the 1980s, et cetera. But I'd say some of the real discovery holes were made in 1997. So literally approaching 30 years now. And so, obviously Argentina again, I mean, there's discovery holes and various operators all across the years here. And obviously silver wasn't doing well. So people dropped it, other people picked it up, advanced it, dropped it. And so, yeah, there's been exploration activities going on here, I'd say, for 30 years now. So yeah, it's definitely not an overnight success. But I'd say over the last 5 years, obviously, is really when we've seen a transformational shift from being 100% focused on this asset and advancing it as quickly as we have. But yeah, it takes time. And that's why when you're looking at silver production, where's it going to come from? Somebody that makes a discovery hole today, yeah, I mean, in 10, 15 years, realistically, if they're able to produce there, like even if they, find a major deposit, that would be my expectation. It's you're looking at decades, not not months and not even years. It takes a long time to build, build up obviously the exploration success that you have. Then you have to define it. Then you have to get permits. All of these things take time.
Yep, and I appreciate that as an explanation and background, because it really does differentiate you from many other companies out there that are putting out drill results. It's very different.
Yes.
Couple of questions here. I know we're coming up on our 1 hour time frame, but so from Michael, is the gold price sustainable? Which is followed up with, I can see that the government deficit is helping with that, but silver is more economically sensitive. Do you see that price as sustainable?
Yeah, great question. I mean, look, from our say, I mean, we've always, obviously, we're biased. We always see higher gold and silver prices down the road. But yeah, even at current commodity prices, I mean, this is extremely economic. So realistically, in our model, we do not run current commodity prices. We run significantly below current spot prices. And it's actually very much closer to those consensus price levels, which are almost still half of the current commodity prices. I mean, obviously, as we look at, so we're running close to this, I'd say, sort of as our internal forecast, closer to $30 silver, $2,500 gold. But yeah, no, I mean, I think at those commodity prices, again, this project, you'll obviously make a construction decision and move it forward. But yeah, with the economic backdrop that we have now, obviously gold hitting all-time highs across every currency out there, the demand from central banks buying, the shortage that we're seeing, the real shortage that you're seeing in terms of the inventory levels in silver. Yeah, this is not, I'd say, a near-term blip. I'd say these commodity prices are going to sustain for a period of time. Ultimately, it is cyclical, so it's not going to be straight up for forever. So there will be some down years here. But yeah, I'd say again, pretty early innings in terms of, especially on the silver side. We've just now seen this year, I'd say it's the first year where we're seeing silver significantly outperform gold. We've seen that in historical bull markets as well. And so, yeah, I would expect that to continue here for at least the next 2 years. So in the near term, I see very, very high gold and silver prices. And then long term, even if things revert to anywhere near consensus commodity prices, you want to have that downside protection where you have a project where you don't need $50 silver to make it work. I think every mine out there, $50 silver would work, so it doesn't take much. But yeah, not many of them work at $25 silver or anything below $30 silver. And so I think we offer that protection that even under a cyclical low dip down the road, this is still going to be an economic mine.
Excellent. Thank you for that. From Chris, presuming the 50% increase in size, what does that change for the mine life? What sort of expectation? If you could just
Yeah, so
remind.
on the feasibility study, expecting close to 20-year mine life. Now, realistically, we will apply for an expansion. So in Argentina, one of the benefits are that you can update your environmental permits every 2 years. And so the current permits that we've applied for are for the 9,000 ton per day scenario. There are scenarios that we're running right now in our own internal models that double the plant size. So you go up to 18,000 tons per day. And so under that scenario, obviously, you would double the amount of production as well. So we're looking at everything in between 9 to up to 18,000 tons per day. And down the road, we could apply for updated permits that have an expansion. And so we kind of see the 9,000 ton per day scenario. If we just keep it at that, it'd have a 20-year mine life. But realistically, before that 20 years, you're likely going to expand the plant and then expand production because you don't want longer than a 20-year mine plan because it doesn't make much sense from an economic standpoint when you look at a discounted cash flow model.
Understand. Next question from Craig. Will any preference be placed on one project area over another? For example, going deeper in a colto to get to the gold.
Yeah, no, so the oxides first and foremost, that's where we've been focused on is obviously the oxides at Oculto at Jack. Those are going to be mined out first because we'll already have the plant to process that. And then, yeah, in terms of the sulfides, so the options are beneath Oculto or at this Cerro Viejo, Cerro Blanco target. These are all, underexplored at this stage. So it really depends on the exploration results and where the best grades are and how deep. So yeah, we'll have to answer those questions, and I think the deeper drilling we do now is going to help us evaluate the potential from these various targets.
Excellent. Well, don't see any further questions in the queue. I know we've gone over a little bit here, but that's quite okay because lots of information and lots of questions, which is good. Let me thank our attendees for joining us and for all the questions. Maybe I'll turn it back to you, John, for what I call just sort of elevator pitch, closing thoughts, and anything else you want to add that we haven't already.
Great. Thanks very much, Jim. Yeah, thanks very much, everyone, for the time. It's been obviously great questions along the way. And yeah, please stay tuned. Again, we're going to have a lot more news flow here from the exploration side, from the permitting side, applying for RIGI here in the very near term. So lots of positive developments that we have ahead of us. So yeah, stay tuned. If you have any other questions, feel free to reach me at john@abrasilver.com. You can email me directly. And of course, if you go onto our website, abrasilver.com, you can sign up to get our news as it comes out.
Yeah, and that reminds me too, John, that I will make sure to keep everybody up to date on the company's progress going forward, news releases, etc. With that too, I actually got a recent analyst report from John, I think last week, so I can forward that to everybody today, post the call. But yeah, John, thank you for sharing the story. Couldn't be better timing. Things are going great, so congratulations to you. And thank you for sharing that. And the last thing I'll say is we'll give out today's keyword. We're sticking with the baseball theme, and we're going to go with the Milwaukee Brewers. So, going to pull for them. I don't think they get a lot of love, so we're going to go with them for now. And,
Yeah, maybe they'll face the Blue Jays in the World Series. Let's see. It's
oh,
about
hey, you know what?
we're from Toronto here, so
I was happy that Toronto beat the Yankees last night, so
yeah,
that was
exactly.
good.
Well, this doesn't happen very often, so yeah, we'll we'll celebrate this win for sure.
Yeah, no, we're on board with you.
Great.
All right, John, thank you.
Thanks.
Attendees, thank you. Everyone have a great weekend, one day early.
Take care.